Okay, making my quick video for my entries into um, the trading for this week. I guess that's whatever the expirations are. Let's see. I guess 7:10 and 7:13. Okay, so I got in on because of the holiday weekend. I got in on Thursday. No, sorry, where am I? Yeah, Thursday before the close. Right. Okay. So real fast. I'm trying to make this fast. Here is the. Oh, Also, I'm trading the bearish again for real, and the others I'm trading in paper. Here is the core trade. Again, these will get adjusted as necessary once the market opens. Like the longer you don't have to put these on, the farther out you can put them. You know what I mean? Like let's say the market runs up. I don't know. Let's just do it like this. What Wednesday till Wednesday? Wednesday is the 8th. Let's say it goes up to Wednesday, like that, and then it starts to go up. You don't need to necessarily put this on at 31.40 anymore. You could put it on because look, to get a 31.40, 31.60, it's going to be. Yeah, you could. I mean, I'm just trying to say you can adjust this. If the only goal is to make sure you don't lose anything when the market runs past this point, I mean, you could just do it like that. So it's kind of like this is just a guesstimate based on what the market is at the time. You could pretty much stick with it because it should be safe. But you might want to get in earlier or later or only do one or whatever. It's not really that important exactly how you do it. It's just that you want to put one or two on so that if the market reaches here where it's no longer likely and past this point where it's no longer likely to make any money, if it continues up, that you're going to be at least break even or a slight loss or even a gain, which it doesn't really matter because the whole point is, it's not going to happen a lot of the time. And when it doesn't happen, you're going to make quite a bit of money. So you just want to make sure you don't lose very much when it goes against you. Now you can, if you want to make a little when it goes against you, that means that you'll be getting whipsawed a little more. If you want to do it only one of these, then you get in a lot sooner and you'll have more whipsaws on one. Or if you want to get in two, you push it out farther, and then you'll have two to get whipsawed, but they'll get whipsawed less because you won't go up. You won't hit it as much. I mean, we could just probably systematize it so we'd do the same thing over and over again, but it's just fairly arbitrary which one you do. Okay, so that being said, this one for the time being. See, I'm showing like if it goes above 31.40, once it goes above 31.40, it's either going to go to 31.60, and then I would add another, and then you see, or it would stay between 31.40. Sorry, once you hit 31.40, you only get out at 31.30. So it either stays in between that range, and you neither get out nor get in a new one. But that's on the 8th. By tonight, you see that 31.40 to 31.60. Okay, you're barely gonna make it. So if tonight the market opened and just ran straight up, you would just pretty much get out of everything by the morning. I mean, that's probably not going to happen, but I'm just showing you why I do it the way I do it. Okay, so that's the logic for really all of the trades. All that you're doing differently is you're getting more or less credit, and so this is bigger. The bigger this is, bigger or smaller. If this is smaller, then that means that you can push these things farther out, and having to deal with whipsawing or any interaction is less likely. That's why I have 3. The core is like the just right. One is too hot, one is too cold, the one's just right, or whatever. And you never know. So theoretically, I should be able to sometimes make money on all 3. Sometimes make a pretty good killing on one. Make something moderate on one, and maybe a small loss or break even on one. And then the iron, I haven't seen an environment where the iron one is not going to work, but I'm sure that's going to happen. Okay, so really fast, I explained that. So this is the core trade. I'm just going to wait until it to the market until the when the market opens tonight. If it goes up to 31.40, I would get it, obviously. Okay, and otherwise I just stay out. The bull, same idea. This is on 31.50. In this case, everything's the same. Just I got less credit. So on the core trade, I can, if each whipsaw is $50. So even down here, you can see you can get the whipsaw 8 times before you start to lose any money. And then even if it goes 9 times, what do you lose? $30, and 10 times you lose $80. I mean, how many times is it going to really whipsaw? I mean, it's not going to whipsaw that many times. So that's why this should really work. Okay, that's that. And then the bear, and same with the bullish, but you get whipsawed fewer times. You can only take 5 or 6. But again, it's farther out, less likely to happen. And then the bearish one that I'm actually in, these are actual fills. So I want to get in one pretty much right away. I mean, that's the plan on the bearish. So, but not right away. You don't want to put it on when you put the trade on, because you put it on Friday night and the market falls, and then you could get hurt. So you just wait till the market opens, and then I'm going to play that little game again that I was explaining, where you just follow the market down. So whatever the market opens at on Sunday night, I just say, let's say it opened at I don't know, 31.16, like it says here, or whatever. If it opened at 31.16, I would say, okay, well, if it goes up to 31.20, I'm going to get in. If not, I'm going to stay out. If it goes down, and then if it goes down to 31.10, then actually, basically, I'm going to stay. I'm sorry, if it opened at 31.16, I would just get in at 31.20 until it went all the way down to 3,100. If it goes down to 3,100, then I would get in at 31.10. If it goes down to 29.90, I would get into 3,000, and so on. That's just a way of trying to catch it at the low. It's not always going to work, but you don't have a lot at stake, because if you put it in and then it whipsaws you and then it continues back down, you just lost $50 off of $650. And then if it falls after that, you're just gonna make your $600 or whatever it is, and that's the whole trade. So there's no, you really want to take a chance and really try to get in really low and really early with just one of these, because you catch it really far down like this. Let's say 3,000 or something. 3,000, and the market runs up. That's it. It doesn't matter where you go, you're gonna make money. Which was the mistake that I made last time, is that I only put the one on and figured, look, the delta is pretty flat, and I'm gonna make money on the trade, which generally speaking is true. I mean, the volatility got crushed so much, probably never that much again, which is why it was a slight loss. But because these do still have some volatility, sensitivity, not much because of this, but a little. So had I done 2 of them, look at that. It's I put 3,000. I'm sorry, that is a fuck up. I should have put 30. if I was saying it falls, I should have said 3100. It's not that good. It's good, but it's not that good. Okay, so 3100. Right. There you go. Sorry. So I'm saying you would just come up here and it goes past this point and you're still going to make something. So my thing is, and this is what I should have done before, and I'm going to stick to it this time. 3130. If it goes up to 33, if I get in at whatever I get in at, I'm going to put the second one up 30 points higher, and then if you whipsaw it a few times, you can take a lot of whipsawing, and it can fall. And if not, you're in it. So when you go up here, you're gonna be getting plenty of profit. And the whole point of this is that how can all three of these get whipsawed? I mean, the moves would have to be tremendously big over and over. Even if that happens once or two times, is it going to happen 5 times? I don't think so. So anyway, that's the system for this week. And here's the Iron Condor. Now it's not in loss. It looks like it is in loss, and you need to see why. This is a quirk of Thinkorswim. Here says it's $584 in loss. It's not in loss at all. It's probably in profit right now. And here's why. Just futures are a little funny on this platform. So see how right here so this trade is made up of this one, which says it's $356 in profit, which it's not, and this says it's 740 in loss, and it's not. And this is the easiest one to show you why. I'm going to right click on it and hit create opposite order, like I'm going to close it, and look at the spread. That's not real. That's just the prices just don't get updated when the market's closed. So, and you can see that over here. So, like you see how it's like, that's probably right, but like look at that, 12 and 100. So this happens all the time. The one thing that's good to know is that this never goes above these numbers. Like the bid is never too high, and the ask is never too low. It's like the bid is always, when they're whacked, the bid is always too low and the ask is always too high, which lets you put the stop orders on the way that I do it, so it won't trigger. That's why they have that thing in there that says that it won't take a bid or an ask when it shouldn't, when you're putting the stop orders on. That's why it's like that. So so you see right here, this is not even showing here, but you can just tell what the spreads are. The spreads are, even right now, when the market's closed, the spreads are $1. Usually they're $1.25. Usually they're 25, 50 cents. And they're certainly not $20. So that's just why it's showing, that huge stupid loss. So me showing you this right now probably doesn't, this is really just going to be in a slight bit of profit. But the point that I wanted to make, why I'm even going into this now, is that what I do when I get into this is I put I don't like the plan to put this trade on. The plan to do this trade is whatever side it runs off of. I'm going to put on these. I'm going to put on 2 shorts if it's running down, or 2 longs if it's running up, and they're pretty much in line with those points there. And by the time you get to the end, you make money. Now you're not in loss like this, so it even does better. But the one thing I wanted to say, what I do on this trade, which is different than the others, I don't put on when I'm doing the bearish, for example, I don't put on one of these futures right when the trade goes on, because if the market falls, you're gonna take a hit. So you don't want that. So, but on here it's the opposite. Even though it takes 2 of these to make an adjustment, once it starts to run, I only need to put 1 on right when the market closes. So you can't tell it here because this is the prices are all fucked up, but this actually neutralizes pretty much any possibility. Like the biggest gap down in history you wouldn't go into loss. So like right now, I got in at 312625. That's real when right before the market closed, and the price actually, it was open for a couple of hours on both on Friday, because futures is open even on holidays. It's open for like a couple hours in the morning or 3 or 4 hours in the morning. So the market actually moved down a little bit. It moved down 10 points. So right now, you know, it's up. This is already like $50 in profit. So when I get at, it doesn't show it right now, but well, actually it does. Look, it's right there. Let's see. There and there is, you show it's, I'm up $48 or whatever. Okay, well, I'm gonna send you this video now. I just got a text from you, so I'm gonna send you the video now. Okay. All right, it's gonna take a few minutes to render, and then I'll send it to you.